Hello and welcome to Insurance Business TV for our first construction insurance market power panel of the year for Australia. We've gathered a couple of experts to help brokers find the opportunities and meet the challenges in this diverse insurance landscape. Peter Jeeves is Head of Construction for Lockton. He's based in Brisbane. And Austin Rosier is Senior Risk Advisor for Omnisure. He's in Sydney. Peter, firstly, welcome to the panel.
Thanks, Danny. Appreciate being back.
Yeah, good to have you back. Let's get the first question from you. Generally speaking, how would you describe the construction market, insurance market now? Would you say it's soft, or how do you see it?
The construction insurance market has shifted, and we are definitely seeing a softening of market conditions as we see competition increase and new players enter the Australian insurance market, particularly in certain sectors where at the smaller end, the competition has heated up significantly in that space. However, this doesn't mean the market conditions can be described as soft, particularly in high-risk regions like Northern Australia, and in difficult areas such as civil or engineering construction, and high-rise residential remains an area of focus for a number of insurers. So it's softening, but definitely not soft is my takeaway.
And Austin, welcome to the panel. Good to have you aboard.
Thanks, Danny. Appreciate it.
Yeah, and how do you see the construction insurance market?
I think quite similar. And I mean, we tend to play probably more towards that smaller end that Peter was touching on earlier. So for us, we've obviously seen quite a few new players come into the market in recent years. And so on your, I guess, more vanilla risks, we're seeing a lot of eagerness, and so we're really having to make sure we focus upon obtaining the right coverage and not always being, I guess, dictated by price driving downwards. And then obviously, again, similarly, where we're seeing high risk or more unusual projects, there's still a lot of challenge in obtaining cover and obtaining cover that's, I guess, favorable and has reasonable premiums, excesses, and the like.
Austin, let's stick with you. I mean, you both mentioned some of them, but if you were to just pick the key drivers of the market right now, Austin, what would you say they were?
I think liability insurance is still a significant concern. I mean, obviously, with construction insurance having a large exposure to contractors in particular, we're seeing significant workers' compensation losses being passed through to the liability aspect of construction insurance programs. And that's something that I think the market's going to continue to face challenge with. I mean, in New South Wales in particular, where I'm located, iCare's had significant changes, significant and substantial sustained losses, and doesn't really seem to have a significant way of working out how to rectify that moving forward. So I think as long as that continues, we're going to see recovery off the liability aspect of the insurance program. So that's obviously a big concern. And then obviously still weather in Australia at the moment. That's an ongoing issue. That's an ongoing concern. Pretty much wherever you are on the east coast of Australia at the moment, you're probably likely to have some sort of significant weather event in a 12-month period. And that obviously creates both delays, which is a big issue because that leads to blowout in cost, particularly when you're trying to insure for a longer period of time or sort of going beyond the 3 years that most traditional insurers are able to accommodate. And then obviously as well, the actual material damage related losses from those weather events as well.
And Peter, it's a pretty broad question, but if you were to pick a couple of key drivers in the market now, what would you say they were?
Look, I think from my perspective, the insurance market is cyclical in nature anyway. And whilst the changing macroeconomic, geopolitical and environmental factors around the globe are influencing the timing of the softening and the hardening of the insurance market, the fundamentals remain the same. As insurers become more profitable, they start shifting from remediating their book to then competing for new business. And that's what we've seen in the insurance market. Notwithstanding that, there are areas that Austin referred to, which insurers remain cautious of and are not jumping into those risks as eagerly as they may be in the property sector or other sectors. So we are seeing some caution in the market, and therefore we are making sure that our clients are aware of those risks, particularly if you're a civil contractor operating in Northern Australia, or if you've got a high amount of subcontractors operating on your book and you're worried about the worker to worker exposure and reliability program, they're the areas in which we continue to work with our clients and focus on to ensure that they're selling their risks and receiving the best terms they possibly can.
Now you both are usually dealing with quite different sectors in terms of customers, but if you were to look across your customers, I mean, who's having the least trouble getting coverages at the moment?
Look, given where we are in the market cycle, I'd say that there is stability across all sectors. We aren't necessarily seeing deteriorating terms. But having said that, we're also not seeing every sector having the degree of competition come back into it. So we are, we remain cautious for civil contractors and those operating in that space, those with high claims already, where we remain concerned about. So they're the areas in which we see concerns in terms of coverage and in terms of pricing deductibles. They're the areas in which we're focusing on and which we're trying to provide some coverage or alternative solutions, such as parametric solutions for those clients.
And among your clients, Austin, who's having the least trouble and who are you focusing on?
So I think light commercial's always going to be viewed favorably. Think fit out works. They're pretty much every insurer you approach on that is probably going to provide terms, and they're probably going to provide them quite reasonably. So that's an area where we're seeing a lot of success for clients and the like. And then I guess as well, I'd say your medium end residential. So not necessarily your churn and burn 100 houses, not necessarily your super high end builds, but those that sort of sit in the middle with your churn and burn. Obviously, I've seen a lot of regulatory issues and a lot of bankruptcies, insolvencies in that sort of sector. And then for your higher end, you start to have complications around time period, potentially large existing structures, exposures, and the like. But for the medium end, they're viewed as really solid risks. They tend to be good operators who've got a bit more experience in the market, and they tend to be really well liked by insurers.
So which construction firms or businesses would you say are having a really tough time right now? Austin, let's start with you.
I wouldn't necessarily link it to a specific firm, but I probably more take it from a project or nature of works type position. So the ones where we're seeing a lot of struggle at the moment are those with large existing structures or existing structure exposures, whether that be residential or commercial. There's still a lot of tension between what's available from traditional property or ISR insurers, and then I guess some of the limits available for construction insurers. So particularly at that smaller end where you might have a business who's doing 15, 20 mil of revenue. So a decent business, but not one that necessarily has access to your major insurers like your Allianzes and the like. They'll sort of have a situation where they might be doing work on a building worth 20, $30 million, and it can be a substantial piece of work. And as a result of that work, they may not have capacity to get insurance for the property under their direct ISR or property. So all of a sudden you've got this tension between, well, my building's uninsured, or I run the risk, or I'm taking some really interesting and complex arrangements potentially overseas to try and obtain that coverage. So that's obviously not ideal and can present a large risk and a large potential exposure to both the builder and the property owner as well. And then I think one in a similar vein, where we're seeing a lot of issues is anything that has a large structural component. So again, if you're looking at existing structure, you might be adding levels or shifting the like, particularly in tightly congested areas, which again, in Sydney, it is an area where there's obviously a lot of buildings that are close to each other and quite dense buildings. So it is an area with a lot of concern around, I guess, vibration, around, I guess, falling to neighboring properties, even, I guess, like flight paths of cranes and the like. So that's an area. And then I'd say finally, just longer project periods, again, more specifically to those smaller projects, but we're really finding that if projects go over 3 years, which thankfully we're sort of seeing, I think the end of those projects were really affected by COVID and that really bad stint of weather. The vast majority of those projects have now closed out, but we did have a really tough period in there where you had a lot of these projects that were sort of hitting that 3-year mark. And you might have had limitations under the binder of the insurer you were placed with. If you were then to try and move that into its own civil project, the costing to do so would be prohibitive because the builder often themselves was doing this as a fixed price contract as opposed to a cost plus contract. So there was a really tough period there, probably 6 to 12 months ago, where there are a lot of these projects that just couldn't necessarily get cover. And some builders were probably opting to go uninsured, knowing the risks, but just knowing that there wasn't a viable or affordable alternative to actually obtain that cover.
And Peter, what about you? Where are your customers having a particularly tough time right now?
Well, look, obviously we saw a lot of contractor insolvencies after the end following COVID, but we are still seeing contractor insolvencies, and like the insurance industry, the construction industry is cyclical in nature. And following following COVID, we did see contractor terms improve for construction companies and other firms, and therefore the risk allocation under those contracts were probably a little bit more reasonable from a contractor's perspective, not necessarily from a principal's perspective. So the principals were sharing a lot more of those risks. And as a result of that, I think the profitability of some of the contractors improved, some of them, not all of them. But what we are seeing is a shift back to hard dollar contracts, and competition starting to enter the construction space. So whilst it doesn't exist at the moment, my nervousness is that we are going to see a similar issue arise with contractors being stretched in terms of their capacity to deliver projects, and that will flow on to their performance under those projects, and subsequently insurance claims will potentially arise out of that. So I'm longer term, I'm nervous about those sort of issues arising in the future.
Let's stick with you, Peter, and something else that can make some people nervous is regulations. Is there a particular regulation you're keeping an eye on, or something that's impacting the customers you work with right now?
Well, certainly we're looking at the in New South Wales and the ACT and other states are looking at property developers and acts around high-rise residential. That's certainly been an issue since Opal Tower and others, where there's been major issues in terms of the construction, the quality of construction of those sites. But I think broadly there's issues around the performance of contractors on those high-rise residential projects, particularly in states like New South Wales, where there's been a number of issues, and Building Commissioner David Chalmers has been on the rampage with contractors trying to lift the quality of and performance of building in that state. So acts that they're introducing, it'll be interesting to see that it's still early doors on some of these acts in terms of what the implications are going to be. But things like the inherent defects insurance and how that evolves in those states is going to be an interesting thing for the construction industry as a whole.
Yeah, there's a lot going on. And Austin, for you, what are you keeping an eye on?
I think I'd probably take a bit of a different tact again, just because clients are obviously quite different. So for Peter, obviously sees a lot of those really large things like the latent defects and the 10-year insurance policies and the like. That's something where his clients probably quite likely to be among the first to take those out. For myself, playing with, I guess, smaller businesses, there's a lot of corporate governance concerns that I'm seeing. So obviously we had the safe harboring rules during COVID around trading insolvent and the like, and obviously the easing of those, and I guess the return to normal on that in recent years has led to a massive number of insolvencies. So I think it was more than 3,000 last year. I think 1 in every 4 insolvencies was a construction firm. So that's obviously quite concerning as to, I guess, any area playing in, particularly as a principal, you're worried about your contractors. As an individual or as a business, you might be engaging another builder to do some work for them, whether that's a home, whether that's an office fit out, whatever it may be. Obviously concerns around whether they'll still be around, and then the impacts that's going to have upon premium pool, and obviously seeing an uptick in claims potentially against insurers where the business may not be able to obtain something. So you see situations where you've got insolvency practitioners kind of going through sites and looking at every single little issue that could be on that site and just lodging a claim against the insurer for that. That's obviously a massive concern and something that we just have to be mindful of in the way that's going to play out and impact the industry further. And then again, I guess in a similar vein, we've obviously seen director IDs come in the last sort of 12 to 18 months, obviously with the intention to prevent phoenixing and to bring in greater accountability and the like. That's just an area, again, where we have to be mindful just to make sure that our clients are educated around these things. And we're starting to see some insurers on management liability policies, for example, put in conditions around director IDs and sort of have specific endorsements relating to that. We're seeing insurers ask the question, have you got your director ID? Have you maintained that properly? And now, obviously, legally, everyone should have done that now, but it's still an area where I think we're just going to have to monitor that. And hopefully, it'll be ultimately for the good of the industry, and that we'll see a greater level of integrity, of stronger businesses, and really just of sustainability across the board.
Mm, uh, this is also a pretty tough question to answer. You both talked about a lot of issues you could be bringing up with clients, but I mean, generally speaking, are there a couple of things that are the top of your mind when you go into a meeting with a construction sector client and want to make them aware of their insurance issues? I mean, what are the top things for you? Austin, let's stick with you and you get an answer on that one.
Yeah, so I think across the insurance sector on the whole at the moment, risk management's paramount. Like we've really seen that shift occur in the last sort of 5 years, where more and more they're not just wanting to know what you do, but how you do it. So with all of our clients, we're just really having those conversations about what are you doing in the day to day to make sure that we don't have an insurance claim. And then I guess from like a specific insurance standpoint, workers' compensation in the construction industry is always going to be a conversation. We're seeing rates go up significantly year on year. We're seeing claims loading be applied year on year. And again, it's an area where it's a pain point for a lot of clients. So I work with a lot of clients who tend to be, in effect, larger project management firms. They'll still sit as the principal contractor, but they won't have any actual tradespeople employed. They'll pretty much all have senior staff employed, and then they're primarily getting contractors to do the actual manual labor. For these guys, they can be paying out relatively significant wages, but they can often be rated as a construction firm, even though they're sitting in the office and just doing the occasional site walk around. So there's a lot of pain points there. And then I guess in terms of actual risks of claims, I think cyber insurance is a massive one. Obviously, you've got construction businesses that are making out massive payments to contractors, to suppliers on a regular basis. So for them, the potential for there to be a rogue invoice or a manipulation of an invoice that results in a pretty significant cash loss is sizable. And unfortunately, in the market, limits of sort of, I guess, more than $500,000 without taking out a standalone crime policy are quite difficult to come by. And so obviously there's a lot of contractors, or sorry, a lot of construction firms who are making payments in excess of that quite frequently. So there's really got to be considerations around the processes in place to protect them, because the likelihood is an insurance policy may not be sufficient, even if they do have one. And then again, obviously, with the economic climate at the moment, trade credit's a really big one that we're talking a lot to our clients about, just making sure that they're getting paid by who they should be getting paid by in a timely manner, and they're not obviously jeopardizing their own business because a business that they've worked with has become insolvent.
Peter, if you were heading off to a meeting right now with a client, what would be the top of your mind at the moment?
It is a couple of bits and pieces, but the main one is that obviously the insurance market has gone through a hardening over the last few years, and we have seen a deterioration in terms and conditions, both from pricing excesses and coverage. So from my perspective, we shouldn't be looking as the terms that exist today as the baseline. We need to interrogate those terms, work out how we can potentially challenge insurers to improve coverage, pricing, deductibles, and highlight what are the areas where clients want to fight to get better terms and conditions. It is a negotiation, and we need to work out how that is going to play out and what's important to those clients. It's also important to understand that our clients have generally got a limited insurance spend, and we're going to make sure that they're spending money in the areas that they're getting best bang for buck. So sometimes they're buying insurance in areas that they could possibly self-insure, and in other areas they're not purchasing insurances on critical risks that can have a catastrophic impact on their business. And we need to highlight what's important and what's not when having those conversations.
Thank you, Peter. And thank you, Austin. And that wraps up our first construction insurance market power panel of the year. Thanks for watching Insurance Business TV. Bye for now.